In this video, we're going to be talking about investing into our children. Do we invest into our children? How do we save money for our children? Everything. We're going to cover it all right here, right now, on the Oliver Belusic's Financial Portfolio. Hello everyone, my name is Oliver and welcome to my YouTube channel. So you may have come across this video as you're a parent like myself and you're wondering, do I save for my child? And if so, how do I save for my child? Well, the simple answer is yes, of course you save for your child. But why should I save money for my child? Because once they're 18 years old, they're out the door, yada yada yada. No, I was out the door at 17 years old, right? You save for your children. And here's a simple explanation and why. And I will give an example of my parents. In 1995, my mother bought her first apartment and that cost her £18,000. Right now, that exact apartment is worth £500,000. If right now, all the prices of the properties are very expensive in your eyes, think about it when your child is 18 years old, 18, 20, 21, when they're looking at investing, getting a place, they can't afford anything. So, save. Now right now, in the local area to where I live, I could buy a 2-bedroom flat for £330,000. Imagine how much that flat is going to cost in 2040 when my son turns 18. So, I am saving money for my child. But where do I save money for my child? That was the biggest question on mine and my partner's lips. Where do we save for our children? Where is the best place to save money? And how and why, etc, etc. We were looking at the Skipton and Yorkshire building societies. They've all got children packages where you can't access the money until they're like 18 years old. You know, lock the money in, can't touch it. That's a great thing, right? Wrong. You never know when you're going to need the money. Your child could go to university a year early or something. The kid may need the money. So, that's when me and my partner started investing for our child. Now, if he sees this video in the distant future, yes, me and your mum have separate portfolios for you. Yes, our child has 2 portfolios, and I'll get into the details on how to start investing. Very simple for your children. But before I do that, I must make you aware that you should open a bank for your children. And this bank account is specifically for the wider community. So for instance, if this child has grandparents that wants to give them some money, chuck it in the account. If this child has an uncle, you know, rather than buying them a toy that's going to go in the bin, chuck some money in the account. Because seriously, even if it's only 2%, it's going to add up at the end of the day. But as a parent, you will be investing a lot more for your children. And personally, I don't invest that much. I invest about £50 a month, but I am looking to upping it to £100 a month at some point in the near future once I can afford it. How do I invest for my children is the question. I use a simple platform called Trading 212. Now, I do talk about this platform a lot, and I am not sponsored by them. I am just a big advocate for Trading 212 because I love the platform and it is so easy to use. And it's literally an app on your phone. Now, in this video, I'm going to be giving 2 examples of investing. I'm going to give you the example for people who use Trading 212 and people who are going to use the S&P 500. The S&P 500 is probably going to be used by more wider, the American communities, whereas Trading 212, I'm not sure if that can be accessed abroad, so that will be for the United Kingdom community. So once you've downloaded the Trading 212 app, what you need to do is you need to click it and you need to launch it. And you'll come onto a page like this. Now this looks very scary. This is the CFD section. Basically you can start investing into currencies, etc. Now this is my personal watch list for it. However, what we're going to be doing is we're going to be clicking the money icon up there and we're going to be scrolling along here and we're going to be going to the investment tab. Now the investment tab is where we can open something called a pie. And as you can see down here, this little piece with a couple of pie slices, that is the pie tab that we want. You've got the investment tab, you've got the pies tab. Slide your finger along to the pies tab and click the open pie library. Now this here is the pie library. It's a tried and tested method where lots of people create their own pies and they advertise what they want. Now what you guys want is you want dividends. Trust me for this. And you want to go to this one here. It's called the almost daily dividends. Now this is the one I actually use. As you can see, this pie gets around 7.77% a year. It has 2 million views and it's got 43.6 thousand users of this pie. So we're going to want to copy this here. You just jump over here, click copy, click next, and then you can create your pie here. Now this one already has everything set up, and if you don't know anything about the stock market, leave it because it's a tried and tested method. However, if you see anything like 3M in it, I highly recommend you just replace it all for PepsiCo. So what you do is you click next. Now this is where you can decide where you invest. You can now invest manually or auto invest, and I highly recommend auto invest because you can set up a monthly investment payment. For my son's one, I have automatically £50 a month. So we go and click next. We can then set up how long we want to be investing for. So for instance, if we wanted to invest till they're 21 years old and on the 10th of every month, because that's the date, you wanted to chuck in £100. By the end of it, you would have contributed £25,000 and they would have £87,300. You see why this is a very useful thing to have. Then of course you decide your initial deposit to put in. I recommend putting in more than £100, and again the figures just absolutely skyrocket. You can mess about with this. So if you were rich and you decided to put £600 in and you're going to do it till they're 18, but your initial deposit was like £500, there you go, look at that. You would have invested £131,000, but there'll be £368,000 at the end of it. Brilliant figures. So what you do once you've got your pie all set up, again this is the exact settings I have for my son's one, 18 years, £50, 150 initial deposit. It's not a lot, but I would have invested 11,000. He would have 31,000 by the end of it, and as I said, I will be upping it as time goes on. So once you get that set up, you click next, you change the name of it. So you just go and chuck your child's name in so you know what the pie is going to be. There you go, we have a pie that is ready to go. We've chucked on a initial deposit of £150 with £50 monthly over 18 years, and our goal is 31,000. How cool is that? Would your child be happy with 31 grand? I hope they would. Then you go and slap confirm and you create the pie and start investing. So as I just previously mentioned, I just showed you the exact method that I used. I had the £150 initial investment over 18 years at £50 a month. Now my partner also has one almost identical to that, so at the end of it our son should have just over £60,000, but hopefully both of us are going to be investing more, as I have just upped my own personal portfolio from £400 a month investment to £600 a month investment. So the idea is that our child is also going to have theirs upped once we have more of an income between us. Why I recommend this method over the bank is because even though the market is up and down, what I showed you specifically is a dividends one. So what the dividends is they decide to pay back their investors. So for example, your child has 50 slices of a company, awesome, that's great. Now these companies are paying dividends back, this dividends gets automatically reinvested. So even though mine says my child's going to get 30,000, at the end of it they're going to be getting more because of the reinvestment of the dividends. And that's why I choose dividends ones, because I'm investing money and the companies are investing on top, and it just goes straight back into it, which is absolutely amazing. And another reason why I say to invest rather than just chucking in a bank and not thinking about it is, for instance, if my child at 14 years old comes to me and says, "Hey dad, I want to open a business," I'll be like, "Sure, have you got your business plan?" He goes off, makes one, comes back, he goes, "Look, that's my business plan, that's what I want to do." And I go, "Okay, here's some money." Obviously not all of it, but we'll be like, "Look, this is some money that me and your mum have been saving for you, good luck." Obviously, if my child started a business, I would be helping them. It wouldn't be as simple as that. But the idea is that if the money was needed for whatever reason, we've got it. It is always good to have access to your money. Don't lock it away. But still have a bank account for your child, because in case relatives don't agree with investing in the stock market or it's dangerous, let them chuck it in it. You've got a weird uncle who wants to give your kid £100 a year, let them chuck it in it. You need all your additional family and friends to just set up automatic payments into that account, just for a little bit of extra money for your child, so you don't have to worry, because at the end of the day the stock market isn't exact. We can't tell you the exact figure that you're going to get, and you could lose it. Mine hasn't been lost yet, but you could lose it. So maybe chucking in a bank as well, having a bit on the side, is a wise idea. Yeah, your kid might miss out on 60 grand, but if they get 10 at the end of it, sure, why would you complain? Now on top of all of this, there is the other method, the S&P 500, which, as I mentioned, Americans/Canadians may want to use, where you just invest into 500 different companies. They also pay dividends, and yeah, it just pays back automatically. It's the same thing as pies pretty much. However, pies, I feel, have worked better for me than the S&P 500, so that's why I would use that particular method. But really the goal is, at the end of it, is for our children to have some money to be able to buy property. And if you really want to be a great parent and you are a property investor as well, just go buy property now for your children, go rent it out now, save that money up, chuck that in an investment portfolio, and then when your child's 18 they might have all this money plus a property. So think about it wisely. It's the end goal. We want our children to all be happy. So I believe I've covered all of the points. If you have any questions, please let me know in the comments below, because I'd really like to know. I hope you guys have enjoyed the video. Smash the like button to help out my channel, and subscribe if you're new and you'd like to see more interesting finance related videos. Again, this is my financial portfolio. That's what I do to invest into my children. What do you guys do? Let me know. Adios and goodbye.
The end.
Like this video!